I'm Alistair McCaig, one of the analysts at IG, and I'd like to talk to you today about Antofagasta's figures and I guess the mining sector at large. Antofagasta have posted their first half profits and they've seen a fall. This Chilean-based copper mining company has seen first half figures drop by 31%. Pretty aggressive, as I'm sure you'll agree. Having said that though, when we take a look at the broader mining community, they're far from alone from seeing their profits collapse. BHP Billiton have seen theirs drop by 15% in the last 6 months, Rio's down 18%, Anglo American down 15%. And although it's very difficult to assess Glencore Xstrata's collapse, we are sure that we have seen both parts of that relatively newly formed company fall as far as profitability is concerned. One of the knock-on consequences of this dramatic collapse in many of these mining companies' figures and the underlying spot market for commodities as well has been a reassessment as far as book value is concerned of the assets that they hold, specifically the commodity assets that they hold. And these mining companies together have wiped off the best part of $60 billion worth of book value. With this, they've had to reassess the viability of a number of their mining operations. Not necessarily their core mining companies and their core mining sites, but a number of the fringe mines that were maybe a little bit closer to spot prices and the profit margins in these operations not quite as good. This in turn has seen a tightening of the actual physical supply to the mining to the commodity markets from these mines as they've tightened up their operations and cut those mines that they felt weren't quite as profitable. And as such, we've seen a squeeze higher in the last 6 to 8 weeks. There's been a number of different issues that have affected the mining community and also the commodity markets as well. Obviously, quantitative easing isn't just affecting the equity market, it's also affecting the commodity markets too. As the quantitative easing fears continue to linger over the market, a number of companies will have undoubtedly tailored some of their forward-looking operations, and as such, potential demand for commodities has drifted on the back of that. Having said that, on the flip side of that coin, of course, is the fact that the Asian markets seem to have picked up the pace a little bit in the last 6 weeks, and certainly a number of the economic data issues we've seen from China have looked slightly more encouraging. That in itself has seen the likes of, say, copper pick up in the last 6 weeks. One issue that isn't being addressed quite so commonly, of course, is actually the developing nations and their collapse in their currency strength. Nowhere is this highlighted more than arguably India, where the Indian rupee against the likes of the US dollar, the currency where the vast majority of commodities are quoted, has collapsed, hitting new lows on a regular basis over the last 4 or 5 weeks. This, of course, means that their spending ability, spending power has been diminished somewhat. It's not just India we're seeing this, the likes of the South African rand, over in Brazil as well, the real, a number of different currencies. And this does account for a sizable quantity of the global demand for commodities. When we look at Antofagasta and the collapse in their share price, which has been a knock-on effect as the collapse of the profitability of this company, we must remind ourselves that these mining companies unfortunately find themselves, as much as they might tailor their costs and increase their profitability from ongoing operations, find themselves by and large at the behest of commodity prices and ultimately commodity demands. For all of this and further analysis, please go to IG's website, www.ig.com. Thank you.